Okay guys, for those of you that are brand new to the drip protocol, this might be a little bit overwhelming. Feel absolutely free to watch the series of my other videos on setting up your wallet, connecting your wallet and stuff like that before you get to this stage of the presentation. It might be a bit overwhelming, but feel free to drop absolutely any questions in the comments and I'll definitely attempt to answer everything as we go along right now. So the best way to understand drip is to compare it to normal main street investment vehicles like certificates of deposits, bonds, and other fixed term investments, if that makes sense to you. Let's look at certificates of deposits as a starting point, right? So what you would do is you would give the bank a certain amount of your funds, you would invest it with them for a certain period of time, and in return for that investment, the bank will offer you an interest rate that is dependent on the size of your investment, the industry or the sector that investment is in, the length of that investment, and whether you have the ability to compound that investment or not. So let's have a look at some of the best certificate of deposit returns that we could be looking forward to. And for the purpose of this exercise, let's try and base all of them on a 12-month or a 1-year term, okay? So if we look at Bank of America, your minimum deposit into this particular certificate of deposit is $1,000. It is for a 1-year period, and your best annual percentage yield is 0.03%. Chase, exactly the same thing. Your APY would be 0.01%. Wells Fargo 0.01%. Now there are a couple of better rates than that. Let's see if we can find some down here. Here we got Bethpage, FCU 1.25. There's a 1% over there, and then obviously you could get better rates than that, and I've seen rates. There's a 2% over there. Let's see if we can find a 3%. I actually have found a 3. There's a 3% over there as well. That's on a 2-year CD. There are some 2% or 3% rates on a 12-month CD as well, 3.25%, but I'm sure you get the hang of that, right? So you give your bank your deposit in return for an annual percentage yield, which would be anything between 0.01% in the case of JP Morgan and those banks, the Main Street banks over here, and 3%, which is on the upper end of the scale. Okay, so that would be your certificate of deposit investment vehicle. Now let's have a look at some fixed income funds. All right, so this would be banks in Australia, Macquarie Bank, AMP Bank. There you would get a 2.7% interest annual percentage yield for a 6-month term. 12 months, you'd be looking at 3.55, so it's getting a little bit better, 3.45%, and that would be for a 12-month term deposit. Obviously, the longer the term, the higher the percentage yield, and the better rate you will receive. A 5-year term, you could be getting 4.4%. That's almost double compared to the investments that we've just covered, but it's still minuscule compared to what I'm about to share with you. Now, before we move on, let's just clarify a few fundamentals. So the main difference between these institutions and DRIP are the following, okay? Is that they are all owned and controlled by a central body, authorized to make changes to withdrawal fees, to deposit fees, to interest rates, whatever their hearts desire. And based on the fractional lending laws, you have authorized these institutions to borrow out 90% of the capital that you've invested for up to 12 months. If your term of your investment is 12 months, and they make big profits with your investment. When you enter the DRIP community website, you more than likely wouldn't see any numbers. You would be prompted to connect your wallet, and you do it up there like that. Connect the wallet over there. Once you see your wallet over there, all of your numbers in your account will appear over here. Now if you're brand new, it's going to be asking you to input a buddy address. Somewhere along here there will be a box where you put the buddy address in it. You'll click update, and once you've done that, the buddy address will permanently appear in that box over there. Once that's done, you know that you're good to go. Okay, so this is just basically for an explanation on how the faucet and the protocol works. For simplicity's sake, so if you look at the top over here, you'll see available, deposits, and claimed. Deposits basically means the amount of drip you've deposited into this faucet smart contract. Available, you would have 1% available of whatever your deposits are over a 24-hour period. So in this case, I've got 1,905 drip in my deposits. Therefore, in a 24-hour period, I will have available 19.05 drip available to either withdraw, which is claim, or to hydrate, which is compound. So that's an explanation of your deposits and your available balance. Now, bear in mind, every single dollar that you deposit into the faucet contract is locked forever. It is not withdrawable. Instead, it is available to you as a reward at 1% return on your investment every single day for an entire 365 days. So the beauty in this, and this is purely simple interest, not even compounded interest that we're speaking about here. So whatever you put into your deposits will be multiplied by 3.65, which will be called your max payout. So the maximum amount any drip player is allowed to withdraw from the faucet contract is 100,000 drip. So to get to your max payout, let's just put a calculator up here. You would need to, let's go 100,000, 1, 2, 3, divided by 3.65. So you would have to have a total of 27,397 deposits in the faucet contract in order for you to hit max payout. Now, at today's rate, max payout at $10 at 100,000 tokens, you'd be looking at a max payout of $1 million. I'm sure you'd agree with me, that is a substantial return on your investment. Okay, so that is how max payout works. Claimed, basically, any money you withdraw from the protocol, your 1% per day, or if you decide to hydrate or compound it, those numbers will be added to your claimed amount. So that is the amount of drip that has been claimed. It might not have physically been claimed into my wallet, but it might have been claimed directly into my hydrate. So that's where the claim number comes from, okay? So just bear in mind, for simplicity's sake, whatever you deposit, you will have 1% of that available within a 24-hour period, and you can either claim that return on investment, or you can hydrate that return on investment. If you hydrate it, that daily earnings will be compounded on top of your current deposits, so you'll be earning interest upon interest, which demonstrate the power of that particular principle in a second for you guys. Okay, so that's basically how the faucet contract works. Now, you might be thinking, how is it possible for you to earn 1% per day? Is it dependent on new money coming into the protocol? Absolutely not. But the way that the drip protocol works is ingenious. Every single transaction performed on the platform attracts a tax. There is a 10% tax for every single deposit that you make. There's a 10% tax for every single withdrawal that you make. And there's a 5% tax for every hydration that you make. Those taxes are sent directly into the tax or the rewards pool in order for that to stack up and to keep the liquidity massive to reward investors. Now, to put this in perspective for you guys, drip is not a brand new protocol. It has been around for over 12 months. Myself personally, I've been involved in the drip protocol from the 21st of August 2021. Now, what you see here is $18,492. And if we were to look at my max payout, which is what I'm eligible for already, and the way that it works, you still receive 1% of your deposits daily, but you receive that 1% for 365 days. And if I was to do nothing else besides withdraw every day 1% of my deposits, my total would be 6,952 drip at 1%, which will give me at today's price $69,520 for an investment of $18,492, which is it's more than a 3x, if that makes sense to you folks. Now, that is not real money because that includes my hydration. So let's see what my actual real spend into this protocol with real money has been. In order for us to have a look at that, we'll use the tool Drip Formulate Finance, right? The entire ecosystem's platforms or dashboards are over here, but for the purpose of this exercise, we will just be dealing with Drip because this is the basis and your foundation to make money or make yield in all of these other protocols, okay? So that's the Drip overview. You connect your wallet. So let's have a quick look here. That's the current drip price. That's the BNB price. Now folks, this is a smart contract. It's on-chain data. So everything you see here is not manually input. It's done via code and it automatically will pull this data from that smart contract, right? So I've got 8 coins available. The value of that is $79.60 at this point in time. I've deposited, as you can see, 18,532. I've claimed 2808, so I've claimed more than what I've deposited, and my max payout, as I mentioned, is 67,000. Right? My if you look at this over here, folks, USD daily, $185 per day at the current drip price, without compounding or anything like that. And it's a total of $5,637 per month that I'm eligible to draw at this point in time already. In order for me to get to my max payout, it's not a matter of if, it's a matter of when you're in the drip protocol. Within the next 290 days, without any dollar cost averaging or anything else, I will hit max payout, and like I've just mentioned, that's 100,000 tokens at today's price of $10. That is $1 million right there. Drip has already reached an all-time high of around $190 about 2 months ago. Probability, not the possibility of that happening again, is almost guaranteed. But if it doesn't happen and Drip stays at $10, it really doesn't faze me, because the compounding curve will overtake the decay curve or the impermanent loss, because the loss of the token is not a permanent unless you sell it. If you leave it in the protocol, eventually what goes down has only got one direction from there, and that is up. I'm sure you folks absolutely agree with me. Now here's something significant I'd like to show you guys, right? Now total deposits, okay guys, this is my actual dollar amount that I'm deposited into the protocol. A total of $7,499 physical money has been deposited into the protocol. I've paid the difference in those in taxes. Alright, so that would be my net deposit, and those are my deposit fees. So $681.80, that is basically the fees that I've been charged. What is significant here, folks, if you look at my total deposits, physical dollars versus my current status, which is 1,904 or 18,532, that is basically at this current rate of 740.20, just short of 3x on my $7,400. So I'm pretty happy where the drip stays at $10 a coin, and I'll be absolutely blown away if it just doubles, which it definitely will in a very short period of time, to $20. That will double. My max payout won't be 1 million, it would be 2 million at $20 a coin. Important for everybody to take notes of is the following. Bear in mind, although there's a dollar amount attached to this, we are paid in the form of tokens. So if the token's current rate today is at $10, when we are receiving our 1%, which is 19 tokens at $10, we're making $190. If we're receiving our 19 tokens and the token price is at $20, we're making just short of $400, and so on and so forth. So to show you folks how easy this is, for the purpose of this exercise, let's compound the $79.70 into our deposits. Now, bear in mind, take a note of that number, which is 79.71. Take a note of the deposit number, which is 18,441. And bear in mind, there will be a 10% tax charge for this transaction. But to show you the power of smart contracts in a trustless environment, have a look at this, folks. So I'm going to click the hydrate button right there. That, you hit confirm. Be sure to read everything in every transaction that you authorize, because you're giving the smart contract authorization to spend your drip. You authorize that contract, a notification should pop up that the trade was successful. Once that happens, the smart contract will basically execute all of the rules. So it'll credit that to my deposits. It'll take 10% out of that and send that 10% to the tax pool, and the balance will go into my deposits. That deposits will be multiplied by 3.65 into my max payout, which I'll be eligible for. There we go, compound successful. So have a look at the smart contract now. See, that's gone back to zero. That's up to 1,913, and my max payout is 6,981. And there you have it, folks. As simple as that. Thanks very much for watching this video. Feel free to join my team. There are some additional bonuses on top of your usual bonuses when joining. The unique selling point of being part of my team is that we will automatically recruit for you using our rotator system and basically taking advantage of our entire marketing campaigns, Google ads, Facebook ads, YouTube paid ads, and email marketing. And if you're a member of my team and you've got a position in our rotator, we rotate leads one by one to each member inside that rotator automatically. I look forward to speaking to you. Feel free to drop any comments in the comment section or any questions, and I'll come back to you guys. Happy dripping out there, and do not get left